Hey guys, Jim Katie here with Katie Real Estate. And today I'm really excited because the government just released their appreciation graphs for the great state of Louisiana and Lafayette. And I wanted to break that down for you today. It's pretty exciting to give you an idea of where we've been with your real estate investment over the last 20 years and also where we are going. So I think you're going to find this interesting. All right, so the U.S. government tracks sales data and also refinances and the appraisals that are submitted for FHA appraisals, and so they've tracked it over 20 years and beyond. But this graph right here shows you from 2002 all the way to 2022 the appreciation, the corresponding appreciation or depreciation during those years. And you can see quite clearly here, each one of these green lines shows, the appreciation for that year, or in some cases, like in 2010, we had, in 2008, we had a decrease or a depreciation in those years. But the overall appreciation from 2002 all the way to 2022 was 100.1%. So what that means is, if you purchase a house in 2002 for $200,000 and you went to sell it today, on average, you're going to be selling that same house for approximately $400,000, which means you gained $200,000 of equity, which is fantastic. But where the real magic happens, and what I really want to bring out in this video, is the power of creating generational wealth by owning real estate and leveraging a mortgage or your down payment to get a mortgage for a larger house. So follow me real quick. If you purchase that same $200,000 house in 2002, most of our clients do not pay $200,000 to buy the house. They typically get a mortgage, and they're usually putting approximately 5% down. So if you put 5% down in 2002 and you bought a $200,000 house, now in 2022, that same house is worth $400,000. So that's an additional $200,000 that you made that appreciated from just that initial investment of $10,000. Now, when you combine that with your principal reduction, assuming you had a 30-year note, you would have paid almost $105,000 down in that 20-year span at a 6.5% interest. Meaning, so you really took $10,000 of your money, you invested it into a real estate home, assuming you have to live somewhere, and now that home is now worth $400,000, but you also had an additional $105,000 in principal reduction. So you really made $305,000 in as a gain in this transaction. Now, that's over 3,000% return on your investment. And that just does not exist in any other type of investment. Now, I remember I just got in the business in 2002, and I can clearly remember we were always struggling and saying, man, prices are too high, even back in 2002. But now, looking back, the only thing we regret is not buying one house, but we should have bought 30 houses back then. And we could have been, significantly more wealthy. But the good news is this trend is most likely going to continue. So check this out. I wanted to point out, the average appreciation going back to 1981 for Lafayette. We have data going all the way back to 1981 to 2002 is an average appreciation of just 2.8%. So experiencing that type of appreciation of 100% increase from 2002 all the way to 2022 is actually relatively on par at 2.8% increase per year is actually below the national appreciation levels of 3.5% so Lafayette's falling underneath there. One thing I wanted to point out is this graph goes all the way back to 1981, and you can see Lafayette in the early 80s was booming. What happened in 83 and 84? Well, we saw a significant decrease in our population because of the oil crash, and we had a lot of people move out. We had oversupply and under demand, and prices plummeted. But even with that, you can see you're going to have ups and downs in the market. And if we're going to see on average 2.8% appreciation year over year. We're going to have some years that are higher, like we had in the last few years, and some years that are lower. But the important thing is to remember is, over time, real estate is just the absolute best investment, because you're leveraging a little bit of money to gain a whole lot. Now, let's think about this going into the future. So if you purchased that same house was $200,000 20 years ago, now that is worth $400,000. Okay, so if you're out there on the market and you're thinking, man, is it a good time to buy? Well, this should really help. With a $400,000 house today, let's say you put down 5%. So, that would be, $20,000 down payment to buy a $400,000 house. If if history repeats itself and we could continue this for another 20 years, in 2042, I know that's a long time from now, but in 2042, you should expect another 100% increase. So your $400,000 house is now worth $800,000. But again, you're also going to have some principal reduction of approximately $210,000. So you can expect to make $610,000 from that initial $20,000 investment. This is how you can use real estate to generate that generational wealth. So with that, I wanted to leave you with this. The idea of leveraging a mortgage and going to purchase a house is always a good time to do this. And history shows us that. There's no other investment that you can expect that type of return year over year. And yet real estate is always going to be one of those solid investments that you can actually purchase, especially if it's between renting versus buying. So I'm Jim Cady with Cady Real Estate. If you want to know how much your house has actually increased in value specifically, we can break that down for you, because every house and every price range and every neighborhood is a little different. So I would love to provide you with any valuable information, or if you're curious to know what your house has done or how it's performing or where it's going, just reach out to me. I'd be glad to talk to you. Thank you.